All right, good morning. So look, I'm just gonna close out on this trade right here, $545 or so. Bam. Let's hit close position. All right, boom. We're good to go for that. All right, now this is what we want to go over today. I call it historical chart patterns. All right, so we got a historical chart pattern, and this is something similar to this historical chart pattern. All right, now if we could look back here, and we could look right here as well too. Of course, this is on the 15-minute chart, but we have a nice impulsive move up, followed by a nice little correction back to this point, and then we come back to this demand zone as well, and we push higher as well. So if you look at these impulses, you notice a trend where we eventually go higher, right? Well, that's what we was banking on exactly with this as well too, by going back and going through the charts, and we're looking for those particular patterns that show up. And if you notice that we had this nice run up right here. All right, had this nice run up. And if you notice what I'm doing, I'm not trying to give a name, even though I can say this is a some type of bull flag. We get that, right? But what this is doing is just really just looking at the chart uh, pattern historically without even looking for a name. If you can, if you want to, but we see this all the time. Like for instance, um, this up here is probably going to be some form of a double or triple top, maybe, especially if you go on a higher time frame and see how this looks. But of course, it's on a 15-minute chart, and we can condense it down if we go on a higher time frame. But what you notice is that we have this nice little growth, and then we eventually get up here to this peak. Now, every peak is going to be different. It's not going to be exactly the same. But when I went back in time and I looked at this move, I did not have a bearish sentiment at all. I felt like we was going to continue to go up, and look what happened. All right, we had this move, and then we ripped above here. Okay, and now we're looking for maybe a little bit of retest, and we could go a little bit higher, but we're also had this bracket in place right now where, and we're going to do it from here basically. And we have to be careful with trading this particular pattern setup, is because this could be a false uh, breakout to trap the bulls. Okay, so the bulls could get trapped, and we possibly could get pulled down here. That doesn't mean it's going to happen, but I'm just giving you a scenario of what something like that possibly could happen. Okay, all right, so let's check some other stuff out. Okay, let's look at the sentiment. All right, so on the sentiment, we have 30% are bullish and 70% are short. So we do know, based off of this, that the sentiment overall is that it's bearish. However, I feel like these moves, we may even get another move up here to wipe out all of these short orders of 70%. So we really want to be mindful. Now, I just took profit because I was on a loan. Okay, right? So that was on a loan based off of this. However, and I just counter traded too, based off this rejection point to take it back in. I did a quick little $300 on a trade, actually shorting it, coming back down into the structure area right here. So I'm just scalping right now. However, what I'm going to do now, I'm just going to hold back, and I want to see this thing actually set up. Is because what we're looking at now is that, are we really looking at getting the iconic hairline of the Bart Simpson pattern? So let's check it out. Let's see. All right, so we see that we got the Bart Simpson pattern shaping up. All right, and we eventually get the drop that we want. Now, look what's happening. We having this hairline is shaping up. Will we get this drop? And that's what we're anticipating. All right, now if we really want to be conservative and really trade this correctly, I really want to wait for this area to really truly be violated. potentially retest it. But when I'm at this level, I'll just go ahead and take the breakout. And if we do get a retest, I use it as an opportunity to add more to my positions, to say the least. Let's go on a higher time frame. Let's see what's going on an hourly. See what it look like. Okay, so this is what we're looking like on an hourly chart. All right, we got this massive break, and now we're getting pulled back. But this pullback is now back into market structure. Um, of where it broke out of. So we could conclude that this potentially is treated as a demand zone on this particular chart setup. However, remember have a uh, we have a demand zone that's sitting right here as well too. And bam, okay. Remember, when price breaks out of a demand zone, that means that it's an imbalance. That means there's more buy orders in the market than there are sell orders. So this creates a what? An imbalance. So we can conclude that eventually price wants to eventually come back to this region. Now, that doesn't mean that when price comes back that you could just automatically say, hey, I'm just going to throw in a buy order when it kicks into this area. Here's the reason why I want you to think of this. This trade setup is really designed for sell pressure. And what I'm going to explain to you is this. If you look at this key area up here, what do you notice? You notice that when price gets up here, it really has a hard time of breaking out of this area. Okay, we got a nice little double top right here to break it down. But for whatever reason, the big players feel like there are a lot of orders they still want to get off of at this price level. They love this price level. They love it so much they brought it here one time, two, three, four, five, six, seven or more times. Look over here. Again, they love this area. Let's see if we got any more. All right. I don't go too far. All right. So we good. All right. Let's do this. Now, with that zone being loved, we can conclude that potentially we're going to see our final um, ride, and potentially now we can start to make our move down. Now, this is not to say that's going to be 100% because we got inflation, we got CPI numbers coming out. The dollar is just going to be strong right now as long as inflation is the way it is. People are going to cut back on spending and they're going to convert over into the safe haven, which is the dollar. But also keep in mind you got the Swiss franc and you got the Japanese yen that also are safe havens as well. As a matter of fact, let's go over and look at some of those as well. All right, look at the Swiss franc, and this is the Canadian dollar. Okay, look, guys, look at that. Look at this chart pattern. If we do historical analysis, look what we got. We got this bam, boom. All right, and we finally make our way down to here, and then now we're fighting to get up. Remember what we just saw. We could anticipate that we're probably going to get a move down on that U.S. dollar CAD, but we get to this level right here, and then we get back up. But this really is shaping up like a huge Bart Simpson pattern when we get some move to the downside. Now, remember, the Swiss franc is a what? A safe haven. So we see right now that this from at least from this point, breaking out of this demand zone all the way up to this point right here, that is over 473 pips, guys. It's a lot of pips. That if you play your cards right and you understand these currencies and how they work and understand macroeconomic data, it could be very beneficial for you guys. All right. All right. So that's a Swiss franc, CAD. Let's look at maybe the euro and the Japanese yen. Let's see what's going on over there. And all right, so we had the euro that was pretty strong against it, but then we had this double top down here, and we're moving down. And due to whatever economic data is in place, we see that we're potentially And maybe if I go on a higher time frame, this could be shaping up as a head and shoulders pattern. You see, we got a left shoulder, we got the head up here, and we got the right shoulder, and then it broke. But we're retesting this area, which could be a double top right here, and we could be sent back down. But the Japanese yen in this case would be stronger. Let's do CAD, JPY. But what you want to do is you want to start going through. Same thing. Look like we're getting a head and shoulders pattern, and we like we're going to get down. All right, so this is going to show that the Japanese yen is going to be shaping up to be a little bit stronger than the CAD, based off of the safe haven concept. All right, so look, I hope this little analysis help you guys. Hit the like button, subscribe. I hope you have a wonderful Thursday. This week is going by fast. Also, please be mindful. Don't be afraid of all the doom and gloom, the recession, depression, whatever talks are out there. There are going to be a lot of opportunities. You just got to continue training yourself. Uh, Start trading, learning, make all your mistakes. Start small, grow big. All right. May the horse be with y'all. Have a great one.